Okay, so good morning, everyone. Hope you're all doing well. Let's go ahead and look at price and what's going on the charts of gold today. So we did have a CPI release yesterday afternoon in the NY session, and it was positive for the US dollar. As you can see here, all the actual results positive was better than they expected. So if you actually ever want to go ahead and read the CPI data release, you just click on latest release right here, and you can go ahead and read everything that was released on the data yesterday. So as we can see that we had positive news. I think we do have PPI today. Let's go and just double check that. Yeah, we do. So we got core PPI, and we also have unemployment claims like we do every Friday. So let's go ahead and break down the chart right now. So as we can see here, we have moved up. Let me go ahead and just delete all of this. This was yesterday's analysis. I did have my buy above 28.90. Price closed above, and it went to the two areas that I was looking at for price to go to, which was here and here, and it basically tapped it right to the T. And I explained that on yesterday's live stream and why I wanted price to move here or had a high probability of moving here. So yeah, and this price ended up moving up. It came up, formed the support, closed back above that level, and continued to rally. And it has rallied in the Asian session. So that's quite interesting to see. So it does usually happen where price will rally in the Asian session and then price will consolidate in the pre-London or London Open. So let's see if we're going to have volume in today's session. Let's go ahead and do some analysis today. So as you can see here, this was the CPI wick. I did have a buy zone down here that I did share. On yesterday's live. I believe it just missed my buy zone by literally about maybe like 5 pips or 4 pips or something like that. But yeah, so it's then come to my supply and not tapped me in either. So I am waiting for price to come back into this level to potentially see a move down. But the current hourly has rejected this hourly resistance to the left. Price has came into this supply zone, or it just didn't make it in there, but we have had a decent reaction from that area. So if we look at the reaction, it's like a 80 pip move, 78, 77 pip move. So yeah, I mean, all I can do now is just wait for some sort of for either price to come back into that supply or to form some sort of support to take buys again. So um let's go ahead and do some analysis on higher time frames as we always do. So the current weekly actually didn't even push down from CPI. I was anticipating CPI to be the catalyst to form a bottom wick on this week's daily candle, but it didn't wick down far enough when it pushed down. So it still hasn't created a bottom wick, which means that there's so much volume in the market. This whole week, gold has literally just moved up and it has struggled to move down. So let me just get my annotations. 1 second. Lovely. So now let's look into this. So we can see that the current weekly is obviously bullish. So let's go ahead and note that down. We'll go over that in a second, which is something I have noticed. We have this huge rejection, which was the move down from CPI, and once the daily is moving up. So we are looking for buys today. We are looking for a strong buy play to potentially correct this move to the left-hand side up until 29.34. So that's the next resistance level. So the current 4 hour has closed bullish. It also hasn't closed with no bottom wick. So it's closed with hardly any bottom wick on this candle. So the current 4 hourly candle has wicked down. We're not sure if that's going to wick down even more to potentially form that bottom wick for the previous candle, or a deeper bottom wick, or are we going to continue up to fill the wick on the 4 hour time frame? So let's just go ahead and have a look. The 2 hour time frame has also closed an exhaustion bullish candle, rejecting this resistance to the left hand side, which is this 2 hour resistance. Let's go ahead and have a look. 2 hours closed. I was closed bullish. The 1 hour has closed bearish. The 1 hour was closed bearish, and the 30-minute has also closed bearish. Okay, cool. So let's go ahead and have a look at structure on the 30-minute. So we can see that price has rejected this level right here. You can see that. It's clear as day to see that we've rejected this 1 hour resistance. So, and this is also the previous 4 hourly wick to fill if it does want to fill it. So let's go ahead and have a look. So I would be looking at buys on close above this level, simply because there is a wick to fill above this area here. So yeah. So the current first area of resistance, right, multiple times, as we can see that this level was respected and it was held multiple times. So it held it here, rejected it, closed below, came back up to retest it and continue to move down. We came up to retest it again. We stayed below this level multiple times with these wicks, rejecting this price at 29.07. And then we've got this area right here where price came back up to this level, failed to break it, and then moved back down. And then these two wicks right here where price has rejected it, and these other two little wicks here, and then price has closed right at it. The next one has created a bottom wick, broke the high, moved up, closed above. So basically this candle has done what all these other candles couldn't do, which is close above 29.07. So we also had a closure above 29.07 right here, which this one basically closed above, but the next one didn't break the high. Then we closed above, and then this was the gap up on Monday, I believe. So yeah, so we moved up. And then we have closed above here and we moved up to around here. So what we can see is that if we can close above here, we can potentially move back up to here, which is 29.12, which is a 60 pip range. So let's go ahead and just break this down, because I think that what might happen is that we could see some sort of a retracement, because price has moved up quite a lot. So we could see some sort of retracement. I would like to see a liquidity grab to the downside before the move back up again, which is key for price to move. It needs to grab liquidity first. So let's see if we can wait for some sort of support to form. Okay, so on the 30-minute, we just have clean candles. We have this huge big imbalance. We have this little structure printed here, this little minor resistance, this minor support, and we broke above that level with entry here and the closure right here, and we moved up. And the current 15-minute candle potentially could fill the wick of the previous 15-minute. As we can see, the previous 15-minute has closed like an exhaustion wick where the body is very, very small. So we just have to wait and see what price is going to do. Would have loved to have taken sales at my supply zone that I shared yesterday. I mean, price literally just didn't get to it, which is a shame, really, because it literally came about half a pip away from the zone, and it's basically had a decent reaction. So for me to trade it, if price did come back into it, I probably would go lower size, simply because, you know, the probability might not be there, since we've already had like a 77 pip move from this area. But yeah, on the 30-minute time frame, you can just see clean candles. So this move could potentially get mirrored. If I'm going to look at what zones I'd be looking to trade today, so let me just go ahead and delete this zone because it never is. I've rough zone to like around here. So what's gone and happened is I've refined the zone to find the most extreme demand zone, but then you also, you know, will end up trading less because there's a higher probability that, you know, price might not come to the zone. And if it does, you will get a better entry. But the problem is that, you know, the trade frequency will decrease. So if I would have left it, you know, where I shared the zone originally on the live, price came, you know, it did actually come sort of tapped into it. But because I wanted to find, you know, the best entry, price, you know, obviously didn't come into my zone. It was about 30 pips away. So let's go ahead and delete all this price action. Where is this relative to the daily candle? Where is the daily candle open? Okay, so let me just locate the daily open. The zone that I can see would be this zone right here, which would be a high probability zone to trade from. But it is about 400 pips away from where current price is. So we look at, let this move up. We moved up. Well, that was a reaction from CPI. We consolidated here. Let me have a look at potential fib from this level. So Yeah, see, the thing is, I do like this zone, but it looks like it's already. I think that this zone could be a high probability zone, but I mean, this would just be a monitor zone. I wouldn't actually be taking any buys off of this level without seeing some sort of solid reaction. But I mean, it does look good because there's a high probability that price won't get to this zone down here, which was which is around 400 pips away. And there has been times where gold has surprised me, many times where gold has surprised me. I thought gold wouldn't come down to a specific price because it was too far, but that term just doesn't exist in trading. There's no such thing as too far away. So if gold wants to get there, she will get there. So it's just a matter of being patient and waiting for the setup to show. So I think this potentially could be, a zone that I'd be looking at for today. Yeah, I'd be looking at something like this as a monitor zone. Let me go ahead and write that in there. Okay, so the 30-minute has closed below. The 30-minute candle has closed below this most recent support. Hmm. 1 hour's broke the low. 2 hours also. Okay, so we've broken a low on the previous 2 hour. Yeah, it's breaking a low without no top wick. So yeah, I won't be executing on this. I would like to see a top wick first and then to see price potentially continuing down. But So price could come into this imbalance right here. Price could come into this area right here and react from somewhere within this area to continue to move up. So could see price wanting to come down potentially to this support at 29.07, which would be great. But yeah, so price has closed below, but there is no top wick. So I'm staying out of this trade. Staying out of this trade. It has moved, and that's completely fine. Okay, so it looks like price has moved into that area and it's sort of rejecting it. Yeah, these London sessions have been a little bit boring. I mean, I think it was Tuesday. Tuesday, I caught a decent move on a live. I think it was about 80 pip move overall. The move did actually continue down from there until yesterday, basically, which was this trade right here. I caught this trade right here with my stop loss above the current candle. 1 second. Yeah, I caught this trade with the stop loss above the current candle. And yeah, gold ended up moving down for like hundreds and hundreds and hundreds of pips. So that was insane to see. Of course, I didn't end up holding the whole move because I was trailing my stop loss and my trailing stop loss got hit. So yeah, I mean, other than that, I did actually take a trade yesterday. Where was it? Somewhere in here. Yeah, it was right up in here. So basically, price had closed above this area, had moved down, moved up, as basically price did reject this level right here. It moved up, it came down, formed a support. I actually did on the live yesterday share this area of demand that I was looking for price to come into, but I actually wasn't at the chart. It came into it and it moved up. So when this 5 minute, I would have liked to end up within this zone, stop loss below the zone, and then to target the high. Obviously taking partials off along the way at like maybe a 1 to 2 or something like that. Took profits off. It would have actually been a 1 to 3. But yeah, I ended up basically taking this and had my stop loss below. That would have been another trade potential area right there. But anyway, missed that. Ended up getting back to the charts as this candle was closing, and then caught this 1 to 1.5 right here yesterday. And then I ended up taking an L with a smaller lot size on a gold continuation down. I was anticipating gold to continue down. And in the pre-NY session, which was right, where was it? It was somewhere in here. It was somewhere in here, yeah. So I basically saw price closing below this level, which is where I was looking to take some sell positions, and I executed off without actually realizing that the previous candle had moved. The body was about 70 pips, but the whole candle entirely was about 100 pips. So if I would have realized that, I would have known that, okay, I would rather wait for some sort of retracement up into this area, which is what happened here. Price closed right at it, and then when it broke the low, that would have been a very good place to take entry with the stop loss above this area right here. So you basically can see that price was moving up. It respected the low of the previous candle right here. So this is the low of the previous candle. We respected the low, we broke the high, and then we struggled to break the high right at this area at 28.85, which is something I broke down. I was looking at sales below here, but yeah, that was one thing I missed out on. So when gold moves, like 100 pips in one candle, wait for some sort of retracement before trading in that direction. So yeah, that was something I noticed yesterday. And yeah, but when I realized it was too late, I did end up managing my risk. So when the 15-minute candle closed bullish, which was when the 15-minute candle closed bullish, so I executed my sell like this once it broke the low of the previous candle. Once it broke the low right here. And this is a shame really, because a lot of the time this type of trade would produce a lot of volume after breaking the low, but on that occasion yesterday, the volume just wasn't there. So I think price potentially wanted to wait for a bit closer to CPI, which is something I will bear in mind next time when I'm trading the pre-NY session before CPI. It's something I never usually do, to be honest, but I thought I could get in on this juicy move down potential to come into my demand area, as I did have a high probability feeling that that price was gonna come down. I just had that intuition. But yeah, so anyway, when this 15-minute candle closed bullish, the next candle closed and broke the high, I just closed the rest of it right here. So I ended up losing about 9 pips on this trade. So yeah, managed my risk really well. I would have ended up losing the whole 40 pip stop, about 38 pip stop. I would have ended up taking the loss on the whole thing, simply because you know price would have came and hit it right here. So yeah, I mean, it's always important if you are going to have your stop loss above the candle highs or lows, have it like 3 or 4 pips above, about 5 pips if you trade prop firm accounts, simply because the spreads are not as favorable as like a brokerage account with any one of these really big companies, for example like IC Markets or Vantage. I know their spreads are a lot smaller than the prop firm accounts. So yeah, so go ahead and potentially above there, maybe put your stop maybe 3 pips above, and just give it some breathing room. Because if let's say I did leave my stop loss open and I gave it a little bit of breathing room, price would have continued down. I would have kept me in drawdown for quite a long time before actually initially moving down. But then what I actually should have done was set an alert at price below this level, set an alerts for a closure below this level, because as you can see, price closed below it right here, with a lot more volume, and then price continued down. So after the retest of 28.85. So that's something I went over in the evening. It's very important to go over your trades. When you've got some free time, go over your trades and see how you could have potentially, executed, with a better entry or lost less. It's always important to go over your trades. And on a winning trade, it's very important to go over how much you could have, you know, how you could have made more money on that trade. Yeah, so not really much going on in today's London session. We have moved and closed below this level, but as I said, there was no top wick on this candle and it broke the low. So yeah, there was no trade for me. I was actually waiting for some sort of top wick and then a break of the low, and then I would have been, in that trade. But yeah, that's a shame, really, but it is what it is. I mean, it's more important to focus on sticking to the trading plan and sticking to your rules and your checklist. So I have a checklist that I have to go through before I execute a trade, and that is what keeps me profitable, and it is what will keep you profitable. But I think the very hardest thing for a new and beginning trader is to find an edge. Number one, once you found the edge, stick to the edge. I think that's another hard thing, because you'll get a lot of trades that might be like intuition based. Like you might think, oh, price is coming, into this imbalance, this buy side imbalance, sell side inefficiency. I'm going to take an entry right here and price is going to go up. But then the problem with that is, okay, it potentially could go up, but where's your stop going to be? Are you going to go ahead and be like some of these other traders that have 100 pip stop loss, 130 pip stop loss to target like a 10 pip move? And, so it might work out sometimes, but the majority of the times it won't work out, unfortunately. So, when you find edge in a market, whether that's through a mentor, a reputable mentor who has like a track record, or you find an edge yourself, which a lot of people say that they do. I don't believe that. I don't believe that people find their own edge in the market. I think that's complete BS. I think that people find a mentor, they learn from them, and then they never give them their flowers, simply because they have they have their own intentions of releasing their own course or releasing their own signals. And if that mentor that if and does provides those services, they have that perception in their mind that, okay, I'm not going to say that I learned from so and so simply because that they're not going to buy my course. They're just going to go directly to who I learned from. So that's why a lot of people in this industry don't give their mentors, the credit due, and that they technically deserve, because without them, you wouldn't have that edge. Of course, taking yourself from being unprofitable to profitable is a responsibility that is your own. At the end of the day, I don't care who you trade with or who your mentor is. It's down to you to make the right decisions so you get paid, because that's basically what trading is. You get paid based on your decisions. And if you make the right decisions, you will make money. And if you make the right decisions, you will lose money. But it's just important of managing your risk along the way so that when you do lose money, you lose less than how much you make, so that there's always there will be edge simply based in the risk to reward side of things, so that even if you do have a lower win rate, there is also edge in the risk to reward. But not necessarily talking about the strategy, but taking profits at, let's say, if you take profits at a 1-to-1. A lot of people think that that's not profitable because it's a 1-to-1. They expect you to have a take profit target of a 1-to-9 or a 1-to-5 or a 1-to-3 or 1-to-2, which is a lot more conservative than a 1-to-9. But you can still be profitable with a 1-to-1 trading strategy, simply because if you take profits at a 1-to-1, but you risk one, but then when you do lose a trade, you potentially lose, 0.6%, and that's anticipating, assuming that you risk 1% per trade, you risk 0.6% or 0.5%. That if you lose 0.5% on every trade and you manage your risk, quite, and you are, quick to react to the markets, which some people are, and some people just don't have that skill. If you are that person, that will make you really good for scalping, because you can analyze the data really quick and react on that data. And then let's say if every trade you're closing at half of a percent, that basically is a 2-to-1, because two of your losers will equal up to one of your winners. So I hope you understand what I'm explaining. But you can still be profitable trading 1-to-1. So don't believe what people say that you can't be profitable. You definitely can be. You just need to be very good at managing your risk, and that comes with experience, that comes with time in the market, and that comes with showing up every single day. You've got to be showing up every single day. That's very important, because if you want a 9-to-5 job, you have to display consistency, and that's showing up to work every day. So a lot of people are happy to show up for another company, for another person, which may be the manager or the management. You're showing up for other people or the owner of the business. You need to show up for yourself. I think that's even more important. You need to dedicate more time to pursuing, the things that give you purpose in life, even more than you're pursuing, a check from a job. So but yeah, unfortunately, people don't show up for themselves as much as they should. And that's why a lot of people don't make it in trading, because unfortunately a lot of people don't want to show up for themselves, or they don't have that grit, they don't have that drive to wake up extra early, to dedicate more time into the craft. And if you're not willing to dedicate time into this craft, then you'll never make it in trading, because it's one of those things that walks with you throughout life. That's how trading is. It's not some sort of overnight get rich quick scheme. You're not going to become a millionaire tomorrow. and you definitely won't become a millionaire within a year. There is some people who learn faster than others, but there is still the journey of the ups and the downs of overcoming yourself, or first believing that the market's against you, which a lot of people say that, oh, they're hunting stop losses. It's a stop hunt. I used to hear that a lot when I began, like, was a big new and beginner trader. But I come to realize quite soon that it's not necessarily a stop hunt. It's just you've put your stop loss in an area where, you know, is where the market's just going to go to sometimes before actually going in your direction. So what I used to notice is sometimes the market would come into my stop loss and then, go in the direction that I anticipated and I analyzed before even taking that trade. So, I mean, it's very important to not necessarily execute and, a trade where everyone else's stop loss is. Just find edge over a long period of time, whether that's 100 trades. Go and back test, live test. You know, um, I don't recommend demo trading. I recommend learn how to click the buy and the sell. On a demo, learn how to put a stop loss, learn how to put a take profit, learn how to manage your risk, and then you can like learn how to manage your risk. So there has to be an element of at least, depending on the strategy. Some strategies are easier to learn, and some people, you know are quicker learners than others. So, give yourself at least 3 to 6 months just learning the craft, learning what support and resistance is, learning what the autonomy of a candle is, um coming to some sort of understanding of what time is going to be the most convenient for you to trade. See, now look at this. The 30-minute has now flipped after 30 minutes of moving down. It's basically rejected this imbalance, which I spoke about, that could be a potential for price to do. So price has basically came down, rejected into it, which could be the current 4 hourly, forming that bottom wick to continue up. So if this current 4 hourly does break its own high, we could potentially see a move up, which would be so it would be the current hour breaking its own high. I mean, sorry, the next hourly candle breaking its own high. Price could potentially come up to fill the 4 hour candle's wick. But unfortunately, this closure on the 30-minute time frame, which is going to close in about 10 seconds, it's just a weak closure. It's a very, very weak closure. So yeah, so the hourly has closed. The 2 hourly is still open. The 1 hour is closed with a huge rejection. Let me go ahead and so it's about 33 pip body, wick, and about a 20 pip body. So we can see that it looks like an exhaustion candle to me personally. Yeah, it looks like there's an hourly exhaustion. So the hourly has closed bearish again. So still closing bearish. The 30-minute is closing doji. Let me go ahead and adjust this on here. So the 30-minute has closed a doji candle. I would have loved to have taken a sell up in my sell zone that I shared yesterday. Yeah. Price has reacted quite heavily off of that zone. Okay, so we have got the 15-minute closing bullish. We've got the 15-minute form some sort of resistance. on the smaller time frames, we could see some sort of potential to continue to move down. So it looks like today's another one of those days where price just doesn't want to give me any setups. And yeah, I mean, it's just one of those days where would like to see price potentially come down and form some sort of support in this area. And then I would like it to look something like this. So it's very important to like visualize what you want to see. Uh, so potentially, something like this, move down, move right here, and then some sort of bearish exhaustion, you know, and then seeing a potential for some sort of reversal at this area, and then price closing bullish. So we formed a support, okay? And then what could happen is we could potentially, create that bottom wick first, and then go ahead and break the high. That is where I would be looking for potential buy area, like buy right there at the break of the high. Or what might happen is price could actually form some sort of range. So when price moves, in one direction, for example, it will usually consolidate, you know, grab liquidity in the opposite direction of where price wants to go, and then it will move in its intended direction. So there's the drive, the range or consolidation, the liquidity grab, and then the next move. So that's four things that I would look for. So with this setup, how that would look is something like this. Something like this. So you've basically got a range, you've got the liquidity grab, and then you've got something like this. This would be one of my setups. This would, I believe it would be a B2. Yeah, it would be. It'd be a B2 setup right here. So you would get, this would be the range. Sorry, wait, let me start again. This would be the drive or the move down. This would be, the consolidation range, this whole range right here. This whole area right here. This would be the range, consolidation. This would be the liquidity grab. And then this would potentially be a high probability for the move up to retest these highs at 29.22. So this is something that I would be looking at for, it might be happening in a New York session. This could happen at this level, or it could actually just close back below 29.07 and then continue down into my monitor zone, which would be this zone right here, which is the zone I would be monitoring, and then potential for this demand zone. So this is the areas where I'm looking to take some potential trades today, for buys to continue back up again. But yeah, for now, it looks like the 30-minute has actually closed an exhaustion candle. We are breaking the highs. On the 15-minute, we are actually pushing up. So yeah, this does look good to potentially see price moving up again. But yeah, so let's just see if we can got the 30-minute breaking the high of the previous candle. It's important to just be patient right now because we do have a decent impulse entry to retest the highs. Right here, we've got clean candles to the left on the 30-minute time frame. On the hourly, We have got this exhaustion, which is obviously the 15-minute and everything pushing up. If we take it based on the second half of the 15-minute candle, that potential buys loading up for the second half of this 30-minute candle. Would like to see this 15-minute candle potentially closing above this area of support right here. So if we do close above this area, we could see a potential move up to retest these highs. Yeah, current 30 is pushing up. Let's wait for this 15-minute to close. Waiting for these closures is very, very important. It's very important. Oh, look at that. Look at that. That moved down right before the close. Yeah, it looks like it's not closing above. It looks like it. Oh, it's just closed above. Okay. It has only just closed above. Okay. Yeah, hourly is bearish. We've already created that top wick for the current hourly. The 4-hour looks like it could actually continue up from here. So this would be the re-break of the 4-hour highs. What I'm actually going to go ahead and do is put a buy stop at the flip of this bullish candle. There we go. I'm activated. Yeah, so these impulse entries do look good. Does look good to continue up on the 4-hour to continue re-break its own high. And I will be managing risk right here. Let me see. So my stop loss is going to be below this previous 15-minute candle. Once it breaks the high of the previous candle, I will. Yeah, it's about 9 pips. Oh, okay. Okay, so it's just broke its own low. Yes, bro. I'm just going to go ahead and manage this right here. I didn't want this candle to break its own low simply because it created a bottom wick and then it re-broke its own high. So if the 30-minute, let's see, have a look and see how the 30-minute looks. Yeah, so we've got this exhaustion on the 30 minutes, broke the high. We have created a bottom wick on this candle. So I haven't managed my position just yet. But if it does re-break its own low, I will be managing my risk, which would be like a -9 pips. But yeah, I just want to give it a little bit more time because sometimes it does break its own low to then continue up again. Very rarely does that happen, but sometimes that does happen. So just have to be patient and just wait. What would have been solid is a potential 30-minute candle closure, but because the 15-minute candle closed above, we are in the second half. So whichever direction this 15-minute goes is going to be in the direction of where the 30-minute candle closes. So let's just go ahead and see if the total stop is around like 30 pips, but that total stop loss is a high probability. I won't let that get hit. So let's just go ahead and wait to see what can become the outcome of this potential trade. So we could potentially see the 4 hour continuing to move up, and that's what I'm liking. So the current 2 hourly has closed bearish. Um, that's on that one time frame. So yeah, there we go. I've just managed my risk right there. I've just managed my risk and closed 50%. And the 5 minute has moved down. Yeah, it looks like price might want to move up to continue the move down. So yeah. I mean, there's a lower probability that price is going to go in my favor now. So yeah, I've just cut this trade early simply because there's a high probability it's going to go to my stop loss, then it is going to go back into profits again. So yeah, that's that trade done. It's very important to manage your risk, as I would have basically just took a whole 40 pip loss, but I've basically lost a lot less than I planned to. There we go. So that's a win in itself. Always remember, if you take a loss, the 30-minute impulse entry did look good to continue up. We got a huge rejection wick. It broke the high. We can potentially see some sort of move up. But sometimes it's the case where price, just doesn't move, or there is no volume to move up. So I will just be sitting on my hands now and waiting for at least this hourly candle to close, or to get some sort of confirmation. If this 30 can close bullish, then that would be good. But I mean, if the 4 hour can re-break its own high, that could be a really good place to potentially, you know, give this trade a second chance. Okay, it's re-breaking its own high now. It did actually wick down and respect the low of the previous candle. But if this, oh, see, there we go. That's the move. There we go. That's the move. So yeah, if this 30-minute candle can close bullish, I'm going to execute based off of the next candle in the next 7 minutes. And if I miss this trade, I miss this trade. That's completely fine. Or if it, yeah, that's a shame really, because I think I might have managed my trade a little bit too aggressively. You know, the stop wouldn't have got hit. It was about 20 pips. Yeah, it wouldn't have got hit. I don't know why I said 40 pips. It's only 23 pips. So yeah, I'm gonna actually just wait for this 30-minute candle to close in the next 5 minutes. And if it does indeed close bullish, I am going to give this trade a second chance. You know, I'm not switching my bias, sticking to the same bias. I want to see a wick down. I want to see a break of the high. If it does break the high with no bottom wick, then I am gonna reduce my lot size, regardless of the loss. I'm gonna reduce my risk, and I am going to potentially see if we can get a move back up to 29.22. Yeah, so it looks like it's just traded within the range of the previous candle. Hasn't broken the high yet. Okay, so there we go. We're getting a move in the last 5 minutes of this 30-minute candle. We are getting a push up. So let's see. Let's see if it can maintain and close bullish. That would be nice to see, because I would like an opportunity to catch this trade back up again, since I didn't get the opportunity to get my sell in. So let's see. And if this trade works out, then I'll be done for the day. If it doesn't work out, then I'll be done for the day. Um, let's see if we can catch a move. If we can, that'd be great. If we can't, then that would be great too. Wow, it's flipped bearish now. So even if I was in this trade, this would have been a break-even trade for me, because it wouldn't have given me enough to secure. It would have given me about 13 pips. So like I did say, once it breaks the high, price does not want to continue up. And this is why it's important to wait, execute it again to potentially catch that move. So it's very important to understand, your bad habits and then overcome them by creating a plan to, helping yourself avoid, like, overcome them, which is what I did. Was when I used to take a loss, I would potentially walk away for about an hour. I would walk away from the chart, come back with a clear mind, no emotional decisions, based on the money that you've basically lost. And yeah, just basically waiting for some sort of confirmation, solid confirmation that there's a high probability setup. And if there isn't any confirmation, then there's no trade. and call it a day on a loss. Because one thing that I was really good at was calling it a day when I'd taken a win, but not on a day when I took a loss. I was in 3, 4, 5 trades deep, over leveraged, about, you know, 10 times more of a percent risk at the markets than I should be risking. And then, you know, before you know it, the account no longer exists and it's been blown up. So yeah, it's all like part of the journey. It's all part of the journey. It's all learning curves that we all have to go through. Some have to learn more than others. Like, you know, some people lose hundreds of thousands before they actually start making money with trading. Some lose a lot less and some lose a lot more. You know, it all depends at what level you're at when you actually come to trading. You know, if you come to trading and you're earning, let's say 30 grand a week, for you to lose 20 grand, it's not really a problem. But for somebody who earns, I don't know, is on minimum wage and earns £1,500 a month, for example, or 2 grand a month or 3 grand a month, you know, for them to lose 20 grand, it's a lot. It's a big difference. One second. Let me just stop the live. Oh my god. And just like that. And just like that. Missed the move. Missed the move, missed the move, missed the move. Yeah, closed doji bullish again. So yeah, but there we go. That was the move, ladies and gentlemen. That was the move. Wow, look at that retracement. Look at that. The 4 hour did actually break its own high. You've got lots of volume here. You got lots and lots of volume here. Let's see, maybe you could potentially take a buyer here. The break it is high, even though I kind of missed the move. Um, mm, yeah, go on. Take a little buy. If price moves up, it moves up. If it continues, then it does. If it doesn't, then it is what it is. It is what it is. But it is, I've stuck to my plan. I waited for the 30 to close. It broke the 15-minute high. And yeah, if it doesn't move up, then that's fine as well. I'm gonna actually just keep my stop loss below. I'm gonna just keep my stop loss below the previous 30-minute candle. And yeah, if it hits my stop loss, then it hits my stop loss. If it doesn't continue to move up, then then it's just tough luck. But at the same time, we still could potentially see a move up from here. I would have liked to have actually executed here. You walk away for a minute or two, and then you've missed a trade. Or 3 or 4 minutes. It didn't even feel like it was that long that I walked away, but yeah. It came down to create a bottom wick. It's respected the low of the previous candle. So technically, if this candle re-breaks its own low, let me just see the difference between the two. So if I have it potentially a couple pips below here, I'd be saving myself about 8 pips. About 8 pips. Yeah, that sounds good to me. I'm gonna move my stop simply because 8 pips is 8 pips. And if it does break its own low, the probability of it pushing up just isn't there, unfortunately. But yeah, missed a move up. Would have potentially thought that price was just maybe retracing on the smaller time frames to continue up. But yeah, it looks like the 5-minute has closed back below this resistance. So I would like to see some sort of closures but above 29.1840. If we can get some sort of 5-minute closures above there, then we could potentially continue to move up and fill that wick. It is not looking good. But this is what happens. So yeah, I'll be happy to take the L if that's the case. But as we can see, there is a lot of volume in the market, so there is still more range for the higher time frame for that 4 hour to flip and fill the wick and potentially continue up. Or maybe even at least fill the wick sweep and break the previous high and then react off of that area and potentially continue down to form some sort of retracement, because the last 4 hour candles has moved up and closed bullish. So for the last 16 hours, we've basically printed and closed bullish. And for the last, we have broken the hourly high. 30-minute they have been respecting each other's lows. They have been respecting each other's lows right here. So as you can see, this one's respected this one and this one's respected this one. So let's see if we can get a move up. Let's see what's going on the 5-minute. If the 5-minute can close above, then we are in the game to continue up. If not, then it looks like price is not going to move up. Or again, should I say, because it's sort of already moved up. I want it to fill that wick. But this would be the second trade of the day, and that would be me done for the day. So yeah, let's just wait and see. Let's wait and see. Wow. Okay, has broken a low. 5 minute. 15 minutes breaking its own low. That means the 30 minutes breaking its own low. Yeah. Today is one of those days, ladies and gentlemen. The stop loss has been hit again. So yeah, that's gonna be me calling it a day here today. So yeah, I mean price is moving down now. So yeah, I hope that you all have a lovely day. That's me done for today.